Hello, hello, students. In the present lecture, we are going to learn another aspect of GST as related with journal entries. We know that in business, transactions happened are firstly recorded in the books that is called as journal. There are two types of things recorded in relation to business transaction. One is journal and another is ledger. In the present lecture, I would like to focus on how to make journal entries in the books of a businessman. So we know about how to record transaction by means of journal entries. So I am taking one illustration. That is, illustration means that is combination of problem and solution. A problem given solution, that is called as illustration. Illustration first, that is, firstly we read problem, then we solve problem. Journalize the following transaction in the books of Vedika Electronics. Vedika Electricals. These transactions are of the month April of the year 2021. This is the business of Vedika Electricals, and some transactions happened in the month April of the year 2021. 1st April, Vedika commenced a business with cash 4,50,000. Furniture rupees 3 lakh and building rupees 5 lakh. This is the first day of April, on which date Vedika has started her electrical business, for which she bought rupees 4,50,000 in form of cash, rupees 3 lakh in form of furniture, and rupees 5 lakh in form of building. That is, business started. On 4th April, purchased a motor car from Tata Company by check at rupees 3 lakh at 18% GST. These 18% has been divided into two parts. India has adopted dual concept of GST. It means that half will go to central government and half will go to state government. It means that out of 18%, 9% tax will go to central government and 9% tax go to state government. Central government tax is known as CGST. State government tax is known as SGST. On 5th April, she paid insurance of the above motor car, rupees 15,000 to National Insurance Company. On 10th April, she paid into Dena Bank rupees 2 lakh. On 12th April, paid for salary 50,000 and rent 15,000. On 15th April, bought goods from Pankaj rupees 4 lakh and paid him one-fourth the amount in cash immediately. This is a transaction of cash as well as credit purchase. She bought goods from Pankaj and one-fourth amount, that is 1 lakh, paid in cash and 3 lakh on credit. On 18th April, cash sales rupees 3 lakh at 5% GST. This 5% has been divided into two parts, 2.5% to CGST, that is Central Goods and Services Tax, and 2.5% to state government, that is to State Goods and Services Tax. On 20th April, received a rent rupees 5,000 and commission rupees 20,000. On 25th April, paid for telephone charges rupees 7,500. On 27th April, invoiced goods to Vaishali for cash rupees 3,75,000 at 5% GST. Kindly remember that 5% is to be divided as 2.5% to CGST, 2.5% to SGST. On 29th April, Rupali brought goods from us rupees 2,25,000 at 5% GST. There are two types of transaction happened: sales transaction as well as purchase transaction. This is sales from our side and purchase from Rupali side. 30th April, paid for printing rupees 85,000 by debit card of SBI, that is State Bank of India. These transactions were happened in the month of April of the year 2021. We are required to pass journal entries in the books of Vedika Electricals. This is problem then so in the books of Vedika Electricals journal entries. In another way, we may say that journal of Vedika Electricals. For passing journal entries, we have required to mention 5 columns here. First column is date, second column is particulars, third one is ledger folio, that is LF, debit rupees and credit rupees. Every transaction has two sides, one is debit side and another is credit side. On 1st April 2021, started business by Vedika Electricals. For that purpose, cash bought into business, that is cash introduced into business. So cash account debit 4,50,000. Furniture bought into business, furniture account debit 3 lakh, and building is also used of rupees 5 lakh. So the total of these three items called as capital to capital account 12 lakh 50,000. B. Started business with cash, furniture and building. This is first entry. That is business started by Vedika Electricals on 1st April 2021 by bringing cash, furniture and building into business. By considering these things, we prepared a entry, that is cash account debit, furniture account debit, building account debit to capital account. Second transaction happened on 4th April 2021. Purchased a motor car of rupees 3 lakh at 18% GST. So invoice, so motor car cost is 3 lakh. On it 18% GST. 18% GST means 54,000 GST, of which half will go to central government, half will go to state government. While passing entry about purchase, we record input. While selling goods, we record output. So, input CGST account debit. For purchase transaction, mention the word input. For sales transaction, mention the word output. Input central GST, in short CGST account debit. Total 54,000 of half goes to settle, that is 27,000. Input SGST account debit 27,000, being purchased a motor car by check with 18% GST. So in that business, motor car purchased of rupees 3 lakh, but that business have required to pay GST, to record GST. For the case of purchase transaction, GST account is given debit, but it is necessary to mention the word input. If the tax is central, that is necessary to mention CGST. If the tax is levied by state, it is necessary to mention SGST. The amount paid by check, that is bank account. So we have passed the entry motor car account debit rupees 3 lakh. Input central GST account debit 27,000. Input SGST account debit 27,000 to bank account 3 lakh 54,000, being purchased a motor car by check with 18% GST. So motor car purchased on 4th April. The insurance of that car was taken on 5th April 2021. So insurance paid, entry for it, insurance account debit 15,000 to cash account 15,000, being paid insurance premium on motor car. Then on 10th April, cash paid into Dena Bank. So cash gone from us and received to Dena Bank. For that purpose, entry is Dena Bank account debit 2 lakh to cash account 2 lakh, being cash deposited into Dena Bank. By that business, amount deposited into bank, the name of that bank is Dena Bank. So entry for that purpose Dena Bank account debit 2 lakh to cash account 2 lakh being cash deposited into Dena Bank. Every general entry is narrated in the form of narration. Narration should give precise and clear message about what transaction happened. It should be specific, clear, simple, and mentioned in minimum words. There is no fixation about writing narration. It is called as narration. Narration may be vary, but that should bring message about the transaction happened. On 12th April, that business paid salary and rent. So entry for it. Cash gone from us and amount paid for the purpose of salary and rent. Salary account debit 50,000. Rent account debit 50,000 to cash account 65,000 being paid for salary and rent. Now we have purchased goods from Pankaj of rupees 4 lakh on 15th April. One fourth of these amount paid by cash and three-fourths on credit. So we purchased goods. Purchase account debit 4 lakh, of which one fourth paid immediately by cash, that is to cash account 1 lakh, and the remaining part is 3 lakh. Entry for it. Purchase account debit 4 lakh. Pankaj account debit 3 lakh to cash account 1 lakh being purchased goods from Pankaj on credit and one fourth amount paid. It means that goods purchased by Vedika Electricals from Pankaj of rupees 4 lakh, of which one fourth amount paid immediately in cash and remaining amount is treated as credit purchase. Then on 18th April, on 18th April, sale of goods of rupees 3 lakh at 5% GST. So 5% of 3 lakh come rupees 15,000. This 15,000 has been divided into central government and state government equally. It means that 15,000 upon 2 is equal to 7,500 for central government, 7,500 for state government, and if the transaction is related with sales, we give credit to GST by mentioning output GST. If that output GST is concerned with central government, we may write it output CGST. If it is concerned with state government, we can write output SGST. So entry for it. Goods sales of rupees 3 lakh plus GST 15,000, it becomes 3 lakh 15,000. So cash account debit 3,15,000. To sales account, to sales account 3 lakh. To output CGST, that is Central Goods and Services Tax, 7,500. To output state GST, 7,500, being goods sold for cash at 5% GST. Then another transaction happened on 20th April, that is rent and commission received to us. Rent and commission received to us, rent 5,000, commission 20,000. It means we have received 25,000. So entry for it, amount received debited, cash account debit rupees 25,000. To rent account, that is amount received on account of rent 5,000, to commission 20,000, being received rent and commission. On 25th April 2021, telephone charges paid by Vedika Electricals. So telephone charges of rupees 7,500, that is recorded as telephone charges account debit 7,500, to cash account 7,500, being paid for telephone charges. That is called as for improving our business. Communication is very important, and we can make communication through telephone or mobile phone, and the charges of it called as telephone charges, and that telephone charges paid by us, entry for it, telephone charges account debit 7,500, to cash account 7,500. Then on 27th April 2021, goods sold by us of rupees 3,75,000 at 5% GST. So 5% of 3,75,000 came 18,750. 18,750 has been divided into state and central government. Tax of central government, tax of GST of central government is known as CGST. GST of state government is known as SGST. So goods sold by us of rupees 3,75,000. In this added 18,750, that becomes 3,97,750. So cash account debit 3,93,750, to sales account, mention amount of actual sales 3,75,000. Then 5% GST has been divided as 2.5% for central government, 2.5% for state government. So 5% of rupees 3,75,000 came rupees 18,750, divided by 2. One part came of rupees 9,375 to, therefore we recorded here, to output CGST 9,375 to output SGST account we recorded 9,375 being goods sold for cash at 5% GST. It is necessary to remember that the rate of tax is to be divided into two parts. If the rate of GST is 5%, it is divided as 2.5% and 2.5%. 2.5% for central government and 2.5% for state government. If the GST rate is 18%, it is to be divided into two parts, 9% for central government, 9% for state government. If the GST rate is 10%, 6% will go to central government, 6% will go to state government. So we passed a journal entry about goods sold of rupees 3,75,000 on 27th April by considering GST named as output CGST and output SGST. Then another entry, we sold goods to Rupali on credit. We does not taken cash for that purpose. So goods sold to Rupali of rupees 2,25,000 to sales account 2,25,000, but on it 5% GST levied. So 5% of rupees 2,25,000 came 11,250. 11,250 has been divided into two parts, 2.5% to central government, 2.5% to state government. Total GST 11,250 divided by 2 is equal to one part is of rupees 5,625. Two parts are we are considering, one part goes to central government, another part goes to state government. So entry for it, Rupali's account debit. While giving debit, we shall consider the amount of sales plus amount of GST. So total 2,36,250 Rupali's account debit. 2,36,250 to sales 2,25,000, that is actual amount of sales. Then amount of central GST called as to output CGST 5,625 to output SGST 5,625 being sold goods to Rupali on credit at 5% GST. Last entry, printing charges paid through ATM or through debit card, that debit card of SBI. So entry for it, printing account debit 85,000 To State Bank of India 85,000 being paid for stationery by debit card. So this is the solution. Hence, we have taken first illustration of Vedika Electricals in which we have passed journal entries about the transactions happened including GST transactions. So in this way I am finishing my speech here. Thank you.